A very warm good evening to one and all. I welcome you all in today's session of Opportunities in Gift Cities, Opportunities in Insurance and Allied Financial Services with expanding business horizons at GIFTS IFSC, GCC's Leasing, Insurance and Allied Financial Services. For that, we have our learned speakers, Harish Jajaria ji, Shami Prabhakar ji and Himanshu Bhandari ji. And before embarking on today's session, may I request our back office team to play our ICI motto song, please.
य एष सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you, everyone. So, friends, today it is fourth session of Opportunities in Gift City. And for that, we have our regional council colleague from Ahmedabad, CA Bishan Sir, sir. So, before going for introduction of our today's learned speaker, may I request CA Bishan sir to address. Over to you, Bishan bhai.
Thank you so much, Secretary WRC Jinal ma'am. And yes, it's a pleasure that we are having this virtual series on Gift IFSC, which is an opportunity. And what I can say, it's a ocean of the opportunity for all of us. Gift IFSC is one of the landmark institution for the India to take it further for the Viksit Bharat. That is what we all dream. And since it is near to Ahmedabad, and our honorable Prime Minister also said that it's a golden triangle, Ahmedabad, Gandhinagar, and Gift City. With this type of series, I am pretty sure that our members will be benefited to enjoy the benefit of Gift IFSC. And so far as the today's subject is concerned, GCC, leasing, and insurance, it is the main crux and what I can say the heart of the Gift IFSC. So I congratulate all the participants for participating in this series, and I am now handing over to our Secretary Madam for the further process.
Thank you, Bishan bhai, for your fantastic address. As rightly said by you, our Gift City is the first ever city of India where there are ample of opportunities and global financial hub. And let us understand what are the professional opportunities for our chartered accountants. And for that, we place sincere gratitude on record to our today's learned speaker, Harish ji, Himanshu ji. And with this, may I request Regional Council colleague Rekha Damankar Madam from Pune to introduce our today's learned faculty. Over to you, Rekha Madam.
Good afternoon, everyone. Today's first faculty, I would like to introduce first faculty Shami Prabhakar. It's a 40 under 40 CA business leader. CA Shami Prabhakar brings over 2 decades of operational excellence, having built and scaled 7th Global Opportunity Center, GCCs from inception, which is a very great achievement. GCC leader and policy advisor, currently advising 2 state governments on attracting GCC investments and shopping ecosystem strategies. research scholar and author with books and research included in the official curriculum of 10 almost 18 universities across 5 countries. Fantastic work, Shamiji. He's a founder of GCC Pros and Independent Research Initiative, strengthening the global GCC ecosystem, known for his borderless global perspectives. So that's let's welcome Shami Prabhakar, sir, at this seminar. I would like to introduce another faculty. Hold on. Another faculty is Himanshu Bhandari. Mr. Himanshu Bhandari is a transfer pricing and international tax specialist with 15 years of experience in cross-border supply chain structuring, TP policy design, APA, CBCR is a master file and global documentation, including representation before tax authorities. Is formerly working with PwC, Deloitte, and Drew Advisory, currently associated with Ortus, advising on inbound, outbound investments and IFSC structures across diverse sectors. Is very active, a leader and thought leader and speaker contributor to the Tax Sutra, Taxman, and ICI publications, and entrepreneur founder of successful ready to cook food startups. Himanshu Bhandariji, welcome. I would like to introduce third faculty, Harish Janjaria. Harish Janjaria is an officer grade A of the International Financial Services Centers Authority, engaged in building and regulating the professional services ecosystem within India's IFSC framework. Is a regulatory and policy specialist involved in the registration, evaluation, and grant of certificates of registration for TechFin and ancillary services, BATF services, and global inbound services, GICs. His key contribution to the landmark regulations, including the IFSCA, that is Global In-House Centers Regulations to 2025, and IFSCA, TechFin and Ancillary Services Regulations 2025 is remarkable. IIT Delhi graduate is IIT Delhi graduate with strong engineering foundation, contributing to the globally competitive, compliant, and innovative driven regulatory environment of IFSC. So we have all these eminent faculties with us today. And I welcome on behalf of WRC all of you. And let's hear from you. I welcome you all and we are eager to listen to you. Thank you very much. Over to the speaker, please.
So, hello everyone. Am I audible now?
Yes.
So, the PPT is visible to all of you?
Yes, sir. Yes, sir. Slideshow करेंगे, sir.
Okay, no issue.
Okay.
So, hello everyone. I would like to thank ICI for organizing this event, and this kind of event spread awareness across the India jurisdiction as well as global jurisdiction about this new concept of IFSCA. So in this session, I will be dealing about expanding business horizons at GIFT IFSC, GCC, and allied services. So first, let's introduce you about the concept of GIFT City. So what is a GIFT City? GIFT City is India's first operational smart city as well as the country's first operational IFSC. So the idea germinated from our Honorable Prime Minister visit to Singapore, in which he see that how a global city with the integration of tech, infrastructure, and finance can do wonders for the nation. So based on his idea, he tries to put that vision into the paper, and we can see that based on this, he has developed this city. So the vision includes a global financial hub for IT with domestic tariff area and a multi-services SEZ, and a greenfield smart city with a state-of-art infrastructure. It is one of the striking feature of GIFT IFSC. It is a vertical city, the first of its kind in India, based on the scale, scope, and quality. So now let's come to the basic structure of the gift city. So gift city is divided into two zones. First is a domestic tariff area which caters to the domestic economy and finance hub, and other is a multi-service SEZ. In the multi-service SEZ also there are two divisions. One is an IFSC which caters to the financial services sector, and other is a non-IFSC SEZ to promote export of IT and other services. So, as you know, that infrastructure is the backbone of any city. So, based on this, a very much focus is given on the infrastructure in the GIFT city. So, as of now, we have allotted development rights of around 29 million square feet with 24 operational buildings and 47 buildings under planning and construction stage. Also, one of the striking feature of GIFT city is its concept of work walk to work concept, which reduces the commutation times. So this is the state of art infrastructure present in the gift city. It has automated waste collection and segregation plant, district cooling plant, underground utility tunnel, waste treatment plant, and a coming riverfront development project. Apart from physical infrastructure, the gift city also houses a significant social infrastructure to improve the livability of the city. It has hospitality sectors like the hotels, including the Brigade, Grand Mercure, and the Gibbs Radisson Blue Gift City. And also, it houses a schooling facility, the Jamnabai Narsi School. At the same time, also there is a proposed Lilavati Hospital coming up to ensure the resident of the city are provided with better healthcare. Now, coming to the location of the city, it is placed very strategically between Ahmedabad and Gandhinagar. The Ahmedabad is the financial capital of Gujarat, which provide a thriving base for business opportunities, as well as the Gandhinagar, which is the capital, which provides an opportunity for interaction with policymakers. And in terms of connectivity, the gift city is very much in reach within a half hour from the Ahmedabad airport as well as the railway station. And also the proposed terminal, bullet train terminal, is within the 15 minutes. And also flights to all the major destinations, both domestic as well as international, are very much within the reach. So coming to the journey of IFSC so far, so in January 2013, the first commercial building was inaugurated. And in 2015, it was notified as a IFSC with four regulators, the RBI, SEBI, IRDA, and PFRDA, regulating their respective verticals. But in 2019, the government notified the IFSC Act to which led to the formation of IFSC Authority. On October 1, 2020, the IFSC assumes power to develop and regulate GIFT IFSC. And as on September 2025, the GIFT city is ranked at 46th position out of 119 centers in the Global Financial Centers Index. So, giving you about the brief intro about the IFSC. So, IFSC is a unified regulator for GIFT City Zone. It draws power of the four domestic regulator for banking in terms of Reserve Bank of India, IRDA for insurance companies, SEBI for capital market entities, and PFRDA for funds. So, as we all know that for any jurisdiction to thrive, there should be a robust regulatory architecture. So IFSC has worked meticulously in this regard and has bring out about 36 regulations which are globally benchmark, which are spread across various sectors from banking to capital market to aircraft leasing to ship leasing to professional service providers like TAS, BATF, GCC, and other. So let us go through the growth of the GIFT IFSC through facts. So as on September 2025, we have registered more than 1,000 entities, which shows the IFSC is growing attraction in both domestic as well as foreign market. So the banking sector, the banking assets have grown for more than $100 billion. With the in the capital markets, the average monthly turnover for IFSC exchange is about $90 billion. Similarly, in the insurance sector, the number of insurance firms has grown to 22, as well as the number of intermediaries has grown to 30. And in terms of the IFSC ship leasing framework, the number of registered aircraft has reached 37 and ship leasers have become 34. Now coming to the individual business segment one by one, we will deal into the what is the current landscape in individual business segment. So starting with the banking sector, as we know that it forms the foundation of any financial services jurisdiction. So as of now, IFSC has 35 banks across from various jurisdictions from Japan to USA to Singapore, including your various well-known names like Barclays, PNB, AZ&B, Deutsche Bank, etc., which include key services like corporate and retail banking, trade finance, investment, loan syndication, merchant banking, etc. So as of date, there are about 12,600 NRI account with a deposit of about $1.1 billion. Also, the total ECB is reached about $37 billion. So fund industry is also in the IFSC. The fund segment has seen a significant boom. In IFSC, there are three categories of fund: the retail, non-retail, and authorized FME. So, which including the sovereign wealth fund and pension wealth fund, endowment fund, etc. The entire ecosystem for funds, the entire ecosystem is available from the fund management entity to fund administrator to trustee to custodian and others. Coming to the capital market segment, so IFSC hosts two exchanges, that is NSE India Exchange and India INS Exchange, on which and also two clearing, that India International Clearing Corporation and NSE International Clearing Corporation, and also host one international depository. As of date, we have around 70,000 demat account open. We also have a average monthly turnover of Nifty of about $4.8 billion, and the average trading on the exchange for per month is about more than $100 billion. Also, as we know that the current world in terms of the global warming and all is moving towards sustainability, and in the same line, the nation are taking climate change and sustainability in a more serious way. India also has committed to become net zero by 2070. In line of this, IFSC is acting as a platform to mobilize global capital for it. Because as per the report, to become net zero by 2070, India needs about $10 trillion, which is a significant sum. So at IFSC, we have been working significantly to attract global capital. As on date, around $7.5 billion ESG listing has been already done. Now, coming to the insurance sector. So, IFSC has done a commendable job at compressing more than 60 plus domestic regulation into 13 simple and comprehensive IFSC regulation. The IFSC Insurance Office can provide services including life, non-life, health, and reinsurance. Today, we have both well-known domestic as well as foreign insurance companies, including the Alliance, the LIC, the Star, etc. To ensure reinsurance business, IRDA has also amended the order of preference in 2023 by placing in IFSC Insurance Office along with the foreign reinsurance branches. Also, in this recent past, the retail insurance business is also gaining. All this is lined with IFSC's vision to develop gift IFSC into a global insurance hub. Now, coming to one of the topic of today about aircraft leasing and financing. As we know that India is the third largest domestic aviation market, and it has one of the largest order book with about 2,000 aircraft to be leased in next 10 years, in which amounts to more than $100 billion. However, the majority, about 75% of India's fleet, are operated from outside, mostly from Ireland. So this leads to a huge forex outflow of about $4 to $5 billion per year. So in order to cater to this demand, IFSC has brought up Aircraft Leasing Framework 2022, which provide a comprehensive framework for leasing as well as financing aircraft leasing activities. As of date, we have 35 registered aircraft leasers which have leased for more than 33 aircraft helicopter leased, which include 161 aircrafts, 91 engines, and 85 auxiliary power units. Now, coming to the ship leasing and financing ecosystem, as we know that 75% of India's trade by value and 90% by volume is carried by maritime transport. However, India's fleet is less than 1% of the global fleet. So, in order to promote this ship leasing ecosystem, IFSC has also brought a ship leasing framework in 22 itself. So, till date, about 30 ship leasers have been registered in it, and 28 ships have leased from IFSC, including the VLC, bulk carrier, tankers, ethane gas carriers, crude oil tanker, LPG, etc. Now, coming to the TechFin and ancillary services ecosystem, which forms a critical part of professional service provider at IFSC. So, we have two regulations in this regard: the TechFin and ancillary service regulation, which provide for BFS, which provide for legal, compliance, management, and consultancy related services, and the IFSC bookkeeping, accounting, taxation, and financial crime compliance regulation 22, which aims to establish IFSC as a global accounting and taxation hub. I will deal more on this in detail in the coming slides. So not only the service provider, IFSC is also working significantly to develop GIFT IFSC as a fintech hub. So in line with this, IFSC has GIFT City has partnered along with Government of Gujarat and Asian Development Bank to develop International Fintech Innovation and Research Center. For this, we have also academic partners in form of Ahmedabad University, IIT Gandhinagar, and University of California, San Diego, and incubation partner in form of Plug and Play. So this aim to provide supply of talent ecosystem as well as to promote innovation and growth in fintech ecosystem. So as we know that for any financial jurisdiction to grow, talent form the base of it. So critical and regular supply of talent is very crucial for any jurisdiction to grow. So IFSCA, due to its strategic location, IFSCA house both inside it and also in the vicinity various major academic institutions, starting from the foreign university located in IFSCA. It include Deccan University, University of Wollongong, Australia, also Gujarat Biotech University and a branch campus of IFT. And within the vicinity of Ahmedabad Gandhinagar region, we have brilliant academic institutions like IIM Ahmedabad, IIT Gandhinagar, National Law University, National Institute of Design, which ensure that the entities located in IFSCA are not short of talent and get a regular supply of world-class talent. So, in line with the ensuring the talent supply, IFSC is also is trying to promote the academic ecosystem in GIFT IFSC. In line with this, currently we have given registration to two foreign university, that is the Deccan University and the Wollongong University, to provide courses related to data science, finance, analytic, business admission, etc. And within this financial year, that is 2026, we also expect that the Coventry University, Queen's University of Belfast, and University of Surrey to commence their operation. In order to further promote the education ecosystem at IFSCA, there is a planning to develop a vertical university campus at GIFT IFSCA with about 500 crore projection to house multiple university under the same roof. It includes academic facility in terms of classroom for interactive learning, lecture theater for large scale presentation, seminar rooms for focused discussion, and laboratory for practical research and academic resources, and also a common facility including auditorium for events and gathering, gym and fitness center for wellness, and canteen and dining facility. So coming to the GIC ecosystem. So what we observe that across the year, India GIC has playing a GIC, what generally is called GCC outside is called GIC in IFSCA, is playing a critical role to promote India's export of services, especially the BFSI sector. And over the past decade, we have observed that from the low end services, the GCC in India are focusing more on research and cutting edge technology. So let me go through the current GIC landscape in India. Currently, India has more than 1,700 GCCs employing approximately 1.9 million professionals. Out of this, approximately 190 plus are for BFSI GCC with a market size of approximately $65 billion. These are from various jurisdictions, including the North America, Europe, and the Asia Pacific. So, and further, as per the EY GCC Vision 2030, the GCC market is expected to grow to $110 billion, and the number of GCCs might include to 2,400, which shows a significant CAGR of 14%. Now, a recent new trend is also emerging in terms of regional concentration of GCC in India. What we have observed that majorly GCCs are restricted to tier 1 cities in terms of Bombay, Pune, Mumbai, etc. So as per the current data available, around 94% of India GCC are located in tier 1 city. So however, in the past few years, due to various government initiative and the initiative at the state level also, we have observed that GCC are moving towards the tier 2 cities in terms like the Jaipur, the Ahmedabad, the Kohima. to the Kolkata, etc. So this adds an added advantage to the gift city. So now, recognizing the importance of the GIC, IFSC has been forefront to promote the GIC as a financial service. So based on our recommendation, the Government of India in 2020 notified GIC as a financial service, based on which IFSC has brought up the GIC regulation initially in 2022. However, with the experience we gained and from the market consultation, there were certain limitation in that regulation. So based on the consultation and feedback we received, we revamped and revised the regulation in last year only in December 2025 and notified a new regulation that is called IFSC GIC regulation 2025. So this is the overall structure or what we call skeleton of the GIC regulation, with chapters spanning from registration of a GIC unit to functioning of a GIC unit, including fit and proper criteria and other operational matters. So I will take you all through all this one by one. So starting with the most conceptual part, what is a GIC? So as per the Government India notification, GIC means a service provided by a GIC unit for delivering services related to financial product and financial services to a financial institution group. And second is, what is a GIC unit? So GIC unit is a IFSC registered unit set up by financial institution group under these regulations under any of the four operating model: the captive, the build, operate, transfer, joint venture model, and the hybrid model. So let me take your 1 or 2 minutes to explain these model. So captive model is a model mostly in-house center in which an entity set up a GIC and operate on its own to provide services to its group entity. In the build, operate, transfer model, an entity will hire other entity to set up and operate the GIC on its behalf for some time. And when the agreement between the two companies get completed or as per their agreement, the entity which is operating will hand over the GIC to the parent entity. Now, the third model is joint venture model, in which two firms will come together and they set up their GIC unit in IFSC, and will this GIC unit will provide services to both the entities. And the fourth one is a hybrid model. It is basically a HR focused model in which the GIC unit will have agreement with another firm to provide HR services, specialized HR services. So these HR will not be on the payroll of the GIC unit, it will be on the payroll of the third party service provider. Now coming to the definition of financial institution group. So it includes group entities engaged in financial services or activities such as banks, NBFC, intermediaries, investment banker, insurance, reinsurance, clearing corporation, etc. For group entities to qualify, also include the subsidiary, the joint venture, associate relationship, common brand name, and etc. Also, under this GIC regulation, the IFSC entity needs to appoint two KMPs, that is the principal officer and the compliance officer. However, we have not mentioned any eligibility criteria in this regard, and the GIC unit is free to appoint anyone as per its policies. Now, coming to the eligibility criteria. So, a financial institution group can directly apply for the registration under these regulations, or also it can authorize a third party to apply on its own behalf. Also, the entities applying for the registration under these regulations must be from the FATF compliant jurisdiction. Coming to the permissible services, a GIC unit may provide GIC service to non-resident entities. However, there are two exceptions to this. Suppose a GIC unit located in foreign jurisdiction is already providing a service to India. So that GIC unit can be relocated from foreign jurisdiction to gift city, and it can continue to provide that same service to India. And secondly, the GIC unit located in IFSCA can up to 10 percentage of its IFSC revenue can provide services to Indian entity. So suppose a GIC unit earns $100 million in a year. So the 10% of 100 million is $10 million. So up to $10 million of services it can provide to its entities located in India. In terms of eligible legal form, the GIC unit can set up either as a company or a LLP, either in a IFSC incorporated form or a branch mode. In terms of some operational provisions like currency of operation, all the business operation in IFSC are to be done in specified foreign currencies only. The reporting requirement is as specified by the authority from time to time. Also, the entities need to adhere to the fit and proper requirements. So this is an illustrative list of services provided under each model. So suppose in the captive model, it is more focused on core sensitive and high value functions which require full control, like your trade processing, fund accounting, core app system and application development, cloud engineering, etc. In the bot model, the entities aims to scale up quickly, especially for standardized and process heavy functions. So it includes your activities like customer support, claim adjudication, loan processing, IT services, finance and account, etc. In joint venture, there is a collaboration between a financial institution group or a local or global partner for shared capability development. It includes services like your AI, AML, experimentation, product prototyping, wealth and asset management, analytics, risk modeling, etc. In terms of hybrid, if a parent wants legal ownership of the GS unit, however, does not want to run HR or people's operation directly, then it can hire a third party who can provide HR, specialized HR for to the entity. So apart from the IFSC GIC regulation, Government of Gujarat on its own has also announced a GCC policy to promote the GCC ecosystem in the state itself. So as per the GCC policy, up to 15% of operational expense are available for 5 years. However, there is a limit that it can be up to 20% for investment less than 20 to 50 crore and up to 40% for investment more than 250 crores. In terms of reimbursement of the employer contribution, also as per the Atmanirbhar Rozgar Sahay Yojana, the government reimbursed 12% of the PF contribution. And also in terms of employment generation incentive, 50% of 1 month's employment cost to the company is paid by the government. The government is also providing capital subsidy up to 30% of the eligible capex, subject to the limitations. Also, in terms of interest assistance, interest subsidy at 7% up to 1 crore is provided. The government is also supporting in terms of electricity duty incentive. So these are the leading GICs that are established in GIFT IFSC. So Bank of America, which today has more than 2,500 employees, one of the oldest GIC established in India. It has grown significantly over the years. Also, we have DWM, which is a US-based trading firms, and State Street, which is a US-based banks. Apart from the SEZ zone, the DTA also houses multiple GICs, including your Infineon, TELUS, Tata Electronics, Accenture, Capgemini, NASCOM Center of Excellence, and IBM consulting firms. So now a natural question arises that why the IFSCA is giving so much importance to the GIC ecosystem. So the answer is simple. The GIC has a multiplier effect on the overall ecosystem. Firstly, it is a very employee intensive process. So it creates a job opportunity for multiple people, which create a vibrancy as most of the employees are young. So it also create opportunity for talent migration and promote innovation and skill development. Now, as we all know, any jurisdiction will not can attain great height without the base of a robust professional ecosystem like the CAs, the lawyers, the engineers, etc. Keeping in this mind, IFSC has been forefront in developing the professional system ecosystem. Based in line with this, IFSC has recently notified two regulations, that is the IFSC test regulation and IFSC BATF regulation to promote professional services ecosystem. So taking you through the professional services landscape in IFSCA. As of now, there are more than 4 lakh CAs with about 70,000 CAs and about 20 lakhs lawyers. Further, about 15 lakhs engineering graduate annually. In terms of the revenue, the professional and other business services in the financial year 23-24, there were exports for more than 122 billion with a CAGR of about 15.6 percentage, which shows a huge growth opportunity in this sector. So recognizing this, IFSC has come up with the two regulatory framework, that is IFSC bookkeeping, accounting, taxation, financial crime compliance as a financial service under the IFSC Act, and the IFSC TechFin and ancillary services as a unified framework by integrating the earlier ancillary framework and TechFin provisions of the FE framework. Now, starting with the IFSC bookkeeping, accounting, and taxation and financial crime compliance regulation. Based on the recommendation, the Government of India in 2024 notified bookkeeping, accounting, taxation, and financial crime compliance as a financial service. So, in pursuit of this notification, IFSC has come up with the IFSC BATF regulation. Now, starting with some of the salient features of this regulation, the regulation empower entities to get registration in four category of services, and the regulation clearly defined what is included in each category of services. Like the accounting services include preparation of financial statement, compilation, reviewing annual and interim financial statement, analysis of financial statement, and other related accounting support services. Bookkeeping services include classifying and recording transactions, including payroll ledgers in terms of money or any other units of measurement in book and accounts or any other related documents. The taxation service include tax consultation, tax planning, preparation, filing of tax return, advice, and guiding the concerned taxation. The financial crime compliance include service rendered in relation to AML, CFT measures, and FATF recommendation. Now, coming to the entity structure that is permissible under the regulation. So there are the entity structure can be company or LLP. However, in the regulation, there is one restriction that the entity has to be incorporated in IFSC. The branch form is not allowed. For in terms of key manager person, the entities need to appoint two, the principal officer and compliance officer. Further, the regulation also mentioned the eligibility criteria and also the education requirement for this person to be appointed as principal officer or compliance officer. In terms of currency of operation, IFSC has specified 15 foreign currency, including your USD, Euro, Australian dollar, etc., for business transaction. However, routine administrative work can be done in INR only. The balance sheet has to be maintained specified foreign currencies. For reporting to the authority, the entity needs to provide information in the prescribed format. However, all the financial reporting has to be done in USD only. In terms of service recipient, the BATF service provider can provide services to any non-resident. So as we know that BATF has been notified as a financial service, so the BATF service can be provided even to non-BFSI sector, which create a huge advantage under these regulations. Also, there are certain safeguarding conditions which are embedded in this regulation, like that cap on transfer of employees. The entity can only transfer up to 20% of its workforce in IFSCA from the domestic area. Further, no asset transfer is allowed from group entities, and there is a restriction on shifting the contracts, and also no premature termination or resigning of the contracts. Also, the entities registered under this regulation have to ensure that they are fit and proper, and all their KMPs are fit and proper at all times. So these are some of the prominent BATF service provided at GIF IFSC. As on date, there are approximately 30 entities which are registered under the BATF regulation. This includes the prominent names like PwC, Dhruva, Incor, BSR, etc. Now, coming to the IFSC TechFin and Ancillary Services Regulation. So, giving you about the brief background of these regulations. So, earlier we have two regulations, two separate. That is the IFSC Ancillary Framework, which regulates your professional services like lawyers, accountants, consultancy services, and IFSC FinTech Entity Framework, which provide for registration of technology-related firm. So, the basic aim of both these service providers were to aid and assist the delivery of financial service. So in order to promote ease of doing business, we thought to bring combine both these framework into a single regulation and brought the IFSC TechFin and Ancillary Service Regulation 2025. So one of the key objective of IFSC TechFin Ancillary Service Regulation was to promote ease of doing business. Now, with a single registration, the entity can do more than 50 services, thereby contributing to the transparency, accountability, and regulatory compliance of the entities present over in IFSC. This instill a confidence in the investor and stakeholder. And also, we think that with these regulations, the more and more specialized knowledge in terms of accountant, lawyers will be attracted towards GIFT City, and to this will enhance GIFT City's position as a regional financial capability hub in short term and a global financial capability hub in long term. So coming to the specifics of the regulation, so starting with the entity structure that is eligible under these regulations, the TS provider can set up either in a form of a company or LLP. or in a form of registered partnership firm. However, this partnership firm have to be a member of a professional body like your ICAI, BCI, etc. In under this regulation, both branch as well as IFSC incorporated form is allowed. Also, the entities are required to appoint a principal officer or a compliance officer. However, we have not mandated any educational or other qualification for these person to be appointed. In terms of currency of operation, it is similar across most of the IFSC regulation. So, like you have to do business in 15 specified foreign currency. Administrative expense can be deferred in rupee, and balance sheet has to maintain specified foreign currency. In terms of all the reporting to the authority will be in the USD. So in terms of eligible service recipient, there are 3 to 4 categories of eligible service recipient. The entities in IFSCA, entities located outside India, which are in the process of carrying any of the financial services covered in subclause 1 to 11 of Section 3(1)(e) of IFSC Act, or Indian entities which are thinking or for their purpose to establish their office in GIFT IFSC, or non-resident entities. So in terms of transition provision, this is applicable to the entities which were already registered under the previous frameworks. So we have provided a 12-month transition period, which can be extended up to 24 months based on the approval. So further, the entities registered under these regulations have to follow a code of conduct, which clearly delineates what do's and don'ts for the entity. Further, the KMPs of the entity have to comply with the fit and proper criteria. And in terms of prohibited services, there are certain services which are prohibited as per these regulations. They include co-regulated activities which are not outsourceable, activities permitted under the other IFSC regulation circular framework, and activities like facility management, maintenance service, transport, logistics, and physical asset management. So this is a list of ancillary services under the first schedule. It includes actuarial service, advisory service, asset management support service, auditing service, business process outsourcing, the fund administrator, human resource and payroll processing, legal process outsourcing, legal services, management consultancy, marketing support, and various other type of services, including the broking services for ship leasing activities permitted. We try to cover all of the major services that are very critical for the delivery of financial services and which are essential in development of any financial jurisdiction. And in terms of TechFin services permitted under these regulations, we have permitted services like big data analytics, information technology infrastructure, cloud, implementation of enterprise governance, risk compliance software, regulatory tech, outsource services operated to data centers, and some other like the space tech, the supervisory technology solution aiding trade finance, etc. So coming to the current status of the test ecosystem in IFSC, as on date, we have authorized about 132 entities in IFSC with with about 16 global entity from various jurisdictions like the Australia, Netherlands, Mauritius, UK, etc. So in various verticals, we have various well-known names. Like in the legal, we have the firms informed like Serial Amachand Mangaldas, Nishit Desai, Economic Law Practice, and recently we have also given registration to AZB partners. In auditing, we have firms like BSR, QS, etc. Similarly, in consulting, we have one of the world major well-known firms like PwC, EY, KPMG. For administration, we have global fund administrator like Apex, IQ, Vistra, SNC, and Ascent. In trusteeship, we have both domestic as well as foreign trustees like the Axis, the Orbis, the IDBI, and the Amicon. The TechMin ecosystem also houses major India's IT giants like the Wipro, Infosys, and Hexaware, Intellect, and also the foreign firms like Cognizant. So coming to the jurisdictional comparison between the IFSC, the foreign jurisdiction, and the domestic tariff area. So, starting from the FEMA perspective, the GIFT IFSC has been recognized as a non-resident from the FEMA perspective. However, in domestic, you are recognized as an onshore resident. Currency of operation in IFSC, 15 specified foreign currencies are allowed for business purposes. However, INR is not permitted. In terms of taxation, so you all will be aware in the recent budget, the government has increased the tax holiday to 20 years. Now the entities registered in IFSCA can enjoy tax benefit for continuous 20 years in any of the 25 years. In terms of law, all the Indian laws will be applicable for the entities operating in IFSC. However, there are some specific carve-outs under various laws like the Companies Act, etc. In terms of regulator, in India, we have four different regulators like the SEBI, the RBI, the IRDA, and PFI, which are regulating their specific financial sectors. However, in IFSC, we have a single unified regulator in form of a IFSC. So now coming to the process flow for filing any application. So this remains same for across most of the verticals in the IFSCA. So the process start with the initial interaction with the division where you will present your business case. And once the division is satisfied that you are eligible to apply under the relevant jurisdiction, it will allow you to file the application. Now we have developed a single window IT system portal to file application. So you will after getting that what you got preliminary approval or you from the division, you will create a login ID for the on the switch portal and file an application. So as you file your application, the two process start simultaneously. The one is your SEZ approval, which is given by the SEZ division in which houses in the FSCA only, and other is your normal regulatory application. So based on your submission and the application in the suits portal, the relevant regulatory department will examine their application, and if they are satisfied that you have fulfill all the criteria mentioned in the regulation, they may grant in principle approval for you. In the meantime, your SEZ process continues, and you will get a SEZ LOA which is valid for 1 year. After the grant of in principle approval, the in principle approval mentions various conditions like you have to open bank account, you have to execute lease deed, etc. Once you submit all the documents to the relevant regulatory department, the department examines them, and if they are satisfied that all the documents are fit and proper, they will grant you final COR. And after the receipt of final COR, you can commence your business. So as we all know that there is a saying that a picture speaks 1,000 words. So these three pictures signifies the journey of a gift IFSC. In 2011, Gift City was just a barren land with a vision on paper. In 2015, there were just two operational business buildings, which marked the start of the activity. And as of 2025, IFSC has become into a robust financial sector with multiple buildings and infrastructure. So thank you all. This is from my side. And if you have any doubt, I'm more than happy to answer. So hello team, I have completed my part. You can allow the next speaker to join.
Raviji, you want to take up next?
Yeah, sure. Himanshu, thank you. So, hi everyone. Good evening. I'll start. Should I share my screen from here, or will it be shared from the backend?
Sir, आप share करो सकते हो.
Okay, let me share from here. That's fine. All right. So, hope the screen is visible now. Himanshu, can you confirm?
Yeah, we can see.
Yes. All right. Thank you. So, hi everyone. I'll try to not get very technical. I'll try to just talk about GCC's basics, I would say, the elementary concept for the GCC, because I understand many of you would be keen to understand how to get into a GCC domain. I expect everyone to be chartered accountant here in this forum. So our primary aspect is to look at opportunities, that how to get into a GCC business, how can we support. So this is a similar content I had been presenting in previous GCC summit with ICI, if somebody has attended already. But so we'll have little bit different aspects in the practical discussion. However, the content remains same. So what is GCC? I think that the major question here, which I keep asking, in fact, everywhere, including recent WOFA or ICI GCC summit or anywhere I go, specifically in finance forum, I think first thing we need to understand is what is GCC. Everybody talks about, I have heard so many colleagues saying, I have a GCC because I provide services to a US company. Somebody says, I have a GCC because I do IP for 50 companies. I mean, so there are different misconceptions. Let me first start with that. GCC, the full form, everybody understand, it's Global Capability Center. In real terms, there's just one thing to remember. GCC is nothing but Indian arm or overseas arm for any group of companies which is operating globally. So if a company is there in US and they have other subsidiaries in 10 different countries, or it could be in 2 different countries, could be in any part of the world, but their work is getting done from India, from their own office, then only it qualifies for being a GCC in real terms. When that work is getting done through a CA office, through likes of Infosys, Accenture, Genpact, any of these companies, they are typically outsourcing models. These two are very different worlds. So the key difference we need to understand is GCC is only qualified to be called GCC when the Indian entity is owned by the group, 100%. It's not shared with somebody else. It's not owned by somebody else. So I think that's very important for us to understand when we are pitching to a prospect client. When we talk about our services, our expertise, we are trying to get an entry to them because this is something we need to showcase while talking to our clients as well. Now I'll talk entirely from perspective of CAs. How do we make space within GCC domain? So I'll start with the slides here. How the things have evolved. So I've been part of this GCC world for last 20 years. So this GCC is not new. We had different names. We used to call it shared services. We used to call it back office. Then the hubs. Then came Global Capability Center. Now it's even turning to GIC, Global Innovation Centers. Some people call it Center of Excellence. It's all same. There's no difference. Just different names, and every 2 years, 3 years, the names keeps changing. One thing which has remained constant is the model, which I just explained. It remains the same. It is there for last 30 years. It's not evolved yesterday. So likes of American Express and many other companies were there even 30 years back. They were operating from large cities like Gurgaon and others, and Delhi. So now, if you look at the evolution of this industry, one is, of course, the names kept changing. Second is the processes which were done from India were changed at large. So initially, we were trusted more to do certain jobs which were having a SOP. I'm assuming that everyone understands what is SOP. So single, there should be a standard operating procedure where somebody says a single source of truth, which says this is the input, this is the processing, and that is the output. No deviation to that. So 100% aligned process, 100% determined process. No room to assume things, no room to think more, no room for innovation there. So you just have got the job, you have to operate accordingly, and you have to deliver what is expected. That was the model in the beginning. Now with AI coming in, with a lot of technology coming in, all of those pieces are getting done through systems, through technology. So we used to have a lot of small softwares early, in-house developed softwares early. Now, in recent years, even SAP has evolved a lot, even Oracle has evolved a lot. A lot of new tools came in, which takes care of a lot of these jobs automatically. Plus, on top of that, there are a lot of automation tools, transformation tools, which make sure that wherever you know the process end to end, you don't need a human to do it. Specifically, there is no value add if you know the input and processing and output. And this is where it has started gaining the importance now. So even today, I would say practically in finance, at least 60% of jobs are still in that mode where SOP is there. We know input, we know output, we know the process part, and there's somebody who is doing it. I'm sure next 5 years it will all be gone. These jobs primarily sit in P2P domains, the O2C domains, the domains where the transactions has a framework. Transactions are done through a framework. When it comes to reporting the numbers, when it comes to FP&A or business finance or making go-to-market strategy or making the pricing deals, there is difficult. I'm not saying it's not doable. It won't get 100% automated, but it will still get automated there. Audit is one thing where again 80% of the things are done through rule book. That is prone to get automated in near future, and already companies have started doing it. So then, how to get ready for the future if we are investing today? I think that's very important. And to understand that, we need to understand the evolution of this journey. I'll not take more than 15-20 minutes to explain what I see personally. So when this industry has started working, the traditional finance used to be like period driven work, right? So we had month end, quarter end. They used to be big events. Nobody's going home. Everybody's sleeping in the office. They're working like crazy hours, making sure that numbers are reported, depending on if company is listed or unlisted. Now, I would say those things are already going out. Now CFO wants every day's report. So there is a continuous close. Nobody can wait for month close or quarter close to see their working capital, their inventory, what their competitors are doing, where EBITDA is moving. It happens on a daily basis. And rather it's now moving to hourly basis through machines. So that entire concept is going to change. And it's changing slowly in bigger companies. I think it is slower in smaller one and mid-size, but definitely it will be going away. Then comes the manual reconciliation. There used to be huge teams, and in any of the large GCCs, half of the team was assigned with only doing reconciliations. So you have one set of data, you have other set of data. Somebody's manually checking and saying in Excel or sometimes even manual in old days, whether it's matching or not matching. And then we took pride in saying, wow, we have done very good reconciliations. It's matching. Or there are 10 open items which we flagged. It has got in the audit reports. That's all going out. We don't need a human to do that either. Now it's all done automatically through the native tools, which are used for accounting, and they're going to get done through automations and AI-driven exceptions. Similarly, you had initial entire focus on accuracy and compliance. We used to always talk about how accurate are our findings, how compliant we are. We didn't miss any deadline. We deserve an award. Nobody cares for that anymore because that's again something for granted. It has to happen. Now, what CFOs care about, what industries care about, what CEOs are looking at, your insights, how much value add you have given, how much speed you could enable your business team to grow them. Nobody cares about you filed GST return in time or you did the tax return in time or you got this much of refund because that's already getting out of their materiality thresholds. So predictability, insights, and speed are going to be the future outlook. Then comes the local book ownership. It always used to be everything has to be in one office, the racks with the files, the hard drives with the backups. Gone are the days now again on there. And now we always talk about in MNCs how much integrated we are. Whether you have one process for R2R for 75 countries or you have 5 different processes. If you don't have just one integrated process to manage your record to report or P2P or FP&A, you are already not considered mature. Your investors look at the problem statement. They are not ready to give you money. You can't get public. You can't, there are a lot of repercussions. So that thing have already evolved at a large scale. Now, this has already happened to the large extent in all multinationals. It used to be a case where we always had to look at data as our output. So no matter what we are using, Tally or SAP or what, these are the 10 reports we used to count. This ledger, that ledger, the P&L format. Nobody cares again there because now it's get custom built. Now you got AI. People look at value within those data. So you don't have a time to read 20-page ledger report or 7-page P&L. Nobody has that time. It should already give you the 3 ratios which make sense in your industry It should already give you the numbers which is needed for decision making. So that's the future. And the last but very important one here is we used to always interact within our company, within our unit. If my branch head is happy, we are winning the race. If my local MD is happy, we are winning the race. At least not the case for MNCs anymore. Now everybody talks to everyone. There's no hierarchy. It's an open office concept. Everyone is accountable for their job. You're not going to grow by making just one person happy or two people happy sitting next to you. You have to be productive in eyes of the overall company. You can't even limit yourself to finance. You have to go beyond finance. You have to look at what your business is doing, what your IT team is doing. How do you support them rather than dragging them? We used to take pride in blocking the funds, not approving the budget because we didn't understand that. That's not the case anymore. Now I see CFOs going and fighting on behalf of CTOs and CIOs and saying, I need to invest in this particular product because this is going to bring efficiency and improve my EBITDA. So it has just got flipped entirely, the whole script. So this is how the things have evolved, the mindset as well as the work model. In short, now if you look at a little granular level, again, you used to be Excel heavy. Excel was life. You used to say, if you don't know Excel, if your chartered accountancy degree is not going to work, you have to be very efficient, you have to be very fast. Nobody cares anymore. I mean, yes, you should know Excel, that's for granted, but unless you know Power BI, unless you know new tools, Python and other things, Excel is no more a skill for anyone. We used to count a lot on Tally, QuickBook, local ERP centric work because affordability was an issue and we wanted to be local. There's nothing against any of the softwares, it's just an example. So we used to look at more or less micro angle. These things have already evolved to macro. So now even all the big companies have the offerings where everybody can afford, everybody has a cloud, everybody has a data lake, everybody has a database connecting to different softwares, the bridges, the platforms. You can't live without that. So it used to be good to have, now it is become a must have budget. Then comes the trackers. We used to have manual trackers where we used to, even now I see a lot of calendars getting published on compliances saying, oh, these are the 10 calendars. I mean, I remember 10 years back, it was even more. These are already gone. I mean, now these things get integrated to your tool. It automatically does 80-90% of the work and then just remind you to review and then you submit the reports to the government or to auditors or to whatever else, where you need to do that. You can't wait for a manual calendar in your bag to open and then see, what's due today or what's due next week. Same thing is happening with the audit effort. Like I said, it's largely getting automated, specifically where you should check with compliances in terms of whether it's compliant with the standards, whether we are meeting all the requirements for the industry specific norms, whether it's meeting the ratio for BFSI, whatever it is. It used to be manual calculations, manual checks, a lot of ulta ticks saying, oh, this is, as an auditor, this makes us feel proud that we have done that check. It's gone already. Now there's already an embedded report which shows you what's in green, what's in red, what needs your immediate attention, what has to be called out, and then those risk measures. The last one here is the career path. We used to see only a narrow career path, always saying you become an accountant, you become a senior accountant, you used to be then deputy manager, something, you become a manager. If you're in CA firm, become a partner. That was it. If you're in industry, probably you become, end of the game is CFO. Now you see a lot of CAs, a lot of our fraternity people, even becoming CTOs, CIOs, definitely CEOs. And that has gone so popular now because we understand the numbers. We know that how to drive this growth, how to drive this game. So the career path has expanded in a good way. You got 10 options to choose from. At a risk, now you got a lot of competition as well, and you have to continuously learn and evolve. Doing CA is not enough anymore. Doing CA gets you an elementary job initially. You get into a firm, you get into a industry. But then if you want to really grow, you want to get into CXO league, you have to keep learning, you have to keep evolving, you have to keep experimenting, keep taking risks, and keep making efforts as much as you have done in CA. So I think this is how it has evolved over last few years, specifically in GCC context. Now, few skills which we have never got opportunity to learn in CA is, and which is must have, you can't ignore, is business acumen. We used to be focusing on if I know tax, if I know, for instance, accounting standards, I'm good to serve. I mean, I'm good to make a good progress, earn good money, keep shifting the jobs, keep getting an increment. I'm sorry to say that, but there's no guarantee that you still have a job if you only stick to that. If you don't have a business acumen, no matter what job we are in. So now every single job in global framework needs you to understand what your company does. If you are in practice, what your client does, what is the business acumen, how do you get the ownership of that business side beyond your accounting, beyond your tax returns. How do you solve a problem which is there with your customer, not really a problem which only there with auditor or regulator? How do you think critically? All of these things are must have to survive or even get an entry. These things now get assessed very thoroughly even at the entry gate when somebody is trying to get a client as GCC or even you're trying to get a job in GCCs. Similarly, the digital awareness, you all know, I think I don't need to talk about it. Automations, AI, Power BI, all of that. It's anyways a buzzword today. But I think what's important here is understand what works for us rather than just claiming that I've done 5 certifications on AI and it's enough. Nothing is enough today. So I think it's important to understand how do we improve our skill set, the existing fundamental skill set which we have gained in CA or in our practice or in our experience so far, how to get that better with the digital awareness, how the ChatGPT or Copilots or like Gemini or Anthropic or whatever else you have access to is going to help it. So now, third one is actually the oxygen for GCC. If you don't understand the terminology, no matter how much effort you are making, you'll not get an entry, and that's for sure because the person you are talking to will understand in first 5 minutes that you know nothing about the industry, so there's no chance to get in there unless you have some alternate routes. So when you are getting into it, you have to understand the language used in the GCCs, in these multinational worlds. And fortunately, these languages are not unique. These are common with outsourcing world. So likes of Accenture and Pacts and all, they had been using it for 20, 25, 30 years already. So if you know somebody in your network, talk to them, understand how does this thing work, what's there in R2 or what's there in O2C, these are just examples. You have 20 such departments. You need to understand what you are trying to win. You can't just get a contract to win, to build a overall GCC on your own if you don't understand this terminology. And that's still a distant dream. Even if you want to get a small contract within one of these processes, you need to understand how they work beyond the terms. So this is quite important for all of us. And this is one advice I carry if somebody approaches me, that how to get client within GCC. Then comes business partnering. Again, it's similar to business acumen. You're not a standalone function in finance. Finance has to partner mandatorily with all other functions if you want to grow, if you want to survive. So you can't operate in isolation without talking to the sales team, without talking to your IT team, without talking to your operations team. It has to be there. And you need to understand that how do they understand your world and you understand their world. So it has to be a relationship. It should not be one of the cases. We have one meeting in a month. It works. Sorry, it doesn't. And last but not the least is people skills, where I personally feel we are not very good at, but we are very good at talking and pitching, but people skill is much beyond that. How do we influence your customers, your potential customers with the value? Just building a deck saying we build GCCs, we do these services, we do it in this city. I serve 10 US clients. Sorry, you can get 10 more in outsourcing industry. You can't get your first one in GCC because here you need to understand the culture, how the global people ecosystem work. How do you operate within that system? How does maturity curves work? How does the relationship matrix works? These are all trainings for a number of years for the people who operate in there. So before you get into that space, you need to really build your skill set on this part. So this is from, again, my personal perspective. There could be 5 more, but these are the key ones which I see here. Now, one thing which is important, some people ask about how does India stand the chance for being a leaders factory. So it has a prominent chance. We can do a lot beyond accounting and taxation. I'm sure some of you would be missing Gift City context in this. So this is applicable for whole of India. So whatever I'm talking about, it's not unique for Gift City. If we are pitching to get more GCCs in Gift Cities, these are the same rules which are going to work. So developing the leaders early, and that means if you have an intern today, if you have a team member today, invest in them. Look into them, from prospect of what potential they carry, where they fit in. Not necessarily everybody is good at audit. Not necessarily everybody is good at tax. Somebody could be good at digital marketing. Somebody could be good at relationship. Somebody could be good at operational side of it. Groom them for that. Build them for that. Invest in them for a few years, and then they will be your weapon to get into this battleground, right? So we always need a team, and that team has to have different type of skill sets to get in. So developing into them is again not a choice. You have to have it. You have to have a very good team with diverse experience, with diverse skill sets. So if you sit across the table and your client want to understand who is good at tech, who is good at finance, who is good at compliance, you have that capability there on the table, not just a promise that will connect you tomorrow. I have an alliance, will do it. Doesn't work. Promises doesn't work if you can't show up. Similarly, the build part of it, so building capabilities, wherein, like I talked about, digital academies, there are a lot of courses, a lot of skill sets you can build which complement your fundamental knowledge. Again, I think that's very important. Doing a course, building a skill set which is not at all related probably won't help. Investing in leadership skill set is key to it, because you're always going to talk to the leaders who has already been dealing with the leaders. So don't expect them to. They might not say you something on face, but they already gauge that within first 2 minutes of interaction that where is your leadership skill in those discussions. So I think that's again very critical here. Then comes the process governance, which is one of the thing. I mean, of course, we do have ICFR and a lot of such things, but that's, in my opinion, no offense, is more to meet with compliance, more to do a process check. I think it has to go beyond. It has to be inbuilt, inherited within your processes, within your offerings, within your discussions. It has to be in DNA. Without that, I don't see any of European companies even taking that risk to take a chance there, because their compliances are much, much, much stricter and ahead than ours. And it's not only limited to data privacy, it's limited to 10 other things. Then comes strengthening the control. This is linked to, again, what I said now. So, like I said, the governance has to be embedded within your offerings and within your process when you talk for the first time. Don't wait for them to ask the questions. You have to have that there on day one. Shift from service delivery, and that simply means that, like I said in beginning, that service delivery is a thing of past, where they had a process, they know what is input, what is process, what is output. It still works in outsourcing, but outsourcing industry is still already dying. So I don't know how much we can do there when the things are going in reverse order. Now everybody looks at value creation, at decision support. I think we have to start building our edge there. And that is one area where I see we lack, comparing to our technology colleagues. They could build that scale, they could build that value, they could have millions and millions of workforce supporting the whole globe. We have similar opportunities in finance, still we fail to just make one of the Infosys or Accenture for finance. And I think that whole thing is linked to this mindset shift. Unless we are able to think that way, I think we'll remain limited to our scope. So this is again very important. And then creating IPs, creating the talent pipelines, going by the approach what your CFO wants from you, rather than we think that these are the 5 things they need, doesn't work. You need to always understand what do my client needs. I won't buy something by looking at only the sale, on the Amazon. I don't look at discount percentage if I don't need it. If I don't need a phone, and even if it's a 75% discount, I don't care. If I need a phone and it's 20% discount, I love to explore that. So that's very simple concept in the business as well. So I think it's very important to understand what are we creating, for whom we are creating, and why are we doing it. rather than just having a service catalog, having all 100 services, copying from somebody else's deck, and going to blindly in the cold email saying we offer all of this and not getting even a single response from there. So I think that's again very critical for all of us. That is it. I didn't want to take much time here. I want to leave it for my next panelist. But this is it. I'm available to connect individually if somebody has any question. Yeah. Thank you. Over to you, Himanshi.
Yeah, thank you, Samiji. I'll just upload my deck. Yeah, is my screen visible?
Yes, it is.
Okay, thank you. Thank you, everyone. I'd also like to place my thanks to WISC of ICI for setting this session. In the times when Gift IFSC, there's a lot of traction, and ecosystem of gift is growing multifold. There are like multiple regulation which have come out, over the years. It's very important for all of us to also see that, okay, what opportunities we as a professionals have. So I think a lot is already covered by the earlier speakers. So I'll not get into, introducing what is Gift IFSC to you. But yeah, I think if we just have to talk about from key features from a tax and regulatory standpoint, then what GIFT offers is a unified regulator. So you don't have to, look at multiple authorities. You just have to see, IFSC is the person go-to authority for any regulation. From a FEMA standpoint, you become a non-resident. So a lot of relaxation when it comes to exchange control. You're able to do transaction in foreign currency, so it helps you uh, earn and maintain your foreign currency earning in a foreign currency. Right. Next is target market. So it allows you to cater to both non-residents and residents. Residents, of course, subject to certain FEMA conditions, but yeah, you get access to a lot of non-residents. And last is tax incentives. I think there are a lot of tax incentives which are there. Uh, if we talk about what are the key tax incentives which are there in IFSC, in the recent budget, the FM announced that the tax incentive which was there earlier for 100% tax holiday, which was earlier for 10 out of 15 years, has now been extended to 20 consecutive years out of 25 years, which is a huge incentive for somebody who who believed in Gift IFSC idea earlier, and also those who are looking to set up, because it now gives you a very long term perspective on Gift IFSC. Or when you set up, you are assured that, okay, for 20 years you're not going to pay any tax. And the best thing is, even after that 20 concessional period, for non-tax holiday period, there's a tax rate of 15%, which is again quite competitive and attractive, as when it comes at a time where entire globe is moving towards a 15% rate. So that's, I think, a very big advantage. I foresee, this will attract a lot of overseas companies to set up presence in Gift IFSC. Second is the concessional rate for MAT or AMT. So wherever applicable, the MAT rate is just, AMT rate is just 9%, which is quite attractive. Then even companies who are going for concessional tax regime of 22%, 22%, they are able to take tax holiday without applicability of MAT. There's no customs, no GST when goods or services are received by FSC unit. So again, which is a good saving. When you pay out dividend from IFSC to non-resident, again, the withholding tax rate is 10%, which is quite attractive. So there are a lot of benefits, which are there from a tax and regulatory standpoint. Yeah, I think we already spoke about this budget announcement, which was there. Uh, I think earlier speakers also spoke about what all services or opportunities are there in Gift IFSC, and I'll just try and touch upon the ones which were not discussed in detail. So first of them is ship leasing. I'll in fact add ship leasing and aircraft leasing in a single category now, while there are two separate licenses. And initially there were a lot of differences, in the ship leasing in structure and for aircraft leasing, but both of them, have been largely unified. So or what all tax benefits that were earlier available to only ship leasing, early aircraft leasing are now also available to ship leasing. Ship leasing, there are two options, typically either you are get into operating lease or you can get into financial lease, right? So operating lease means the lessor is also participating in operations of the leased ship. So they are also not giving away the risk which are associated with operations. Typically, it would include wet lease, or there are like voyage charters, or then there are employment related services, etc., which are part of ship leasing. There could be also asset management support services for ship which are leased by a lessor or within the group. So all these activities are typically covered under ship operating lease. For financial lease, as we all know, financial lease is only about funding the lease and not getting into the operations. So in GIFT IFSC, one can go either for operating lease or for financial lease or a hybrid of both. So this creates an opportunities for a lot of Indian enterprises, who are looking to own ship. Because earlier the structure was majorly, globally the structure was through Ireland. But now we have an option that somebody can set up a entity in IFSC, own a particular lease, a ship, and then lease it to an Indian person or to outside India. And all those income relating to lease is now can be kept at GIFT IFSC. Other benefit of GIFT IFSC is the cost of substance is much cheaper as compared to the other jurisdiction. So if somebody just goes and set up an entity in Ireland and does all this transaction, to cost of creating substance there was much higher as compared to what one can do in GIFT IFSC. Here, what is permitted is, if let's say if there's an existing ship or vessel which is there with the person resident outside India, he can transfer it to a IFSC entity and take it on a service, which is allowed. But if the Indian person already owns a ship, right? They cannot transfer it to IFSC entity and take a lease back, because the idea is to get new foreign investments or new ship leases and not transfer the existing Indian ones. But still, there's a lot of opportunity in ship leasing space. Typically, the targeted segment will be, the ship owner, ship asset manager, cruise managers, oil rigs, dredging companies. There are a lot of mobile offshore vessels, etc. So it allows you to explore. Ship leasing within GIFT IFSC. So for all chartered accountants who are working, here, maybe they can see if any of their client is looking into or engaged in any of these activities. The GIFT IFSC now provides a very competitive landscape as compared to any foreign jurisdiction. I think benefits, of course, all benefits which we spoke about GIFT City, the unified regulatory scheme, attractive tax, uh, deemed foreign jurisdiction from FEMA, etc., provides a lot of benefit to all ship leasing companies. Now, key regulatory consideration is, if ship leasing companies, they have to obtain a certificate of registration from IFSC to act as a lessor. So this is more of a lesser sector regulation. One can set up as a company or a branch or LLP or a trust. There's a minimum capital requirement of $3 million for finance lease, and for operating lease, it is only 0.2 million. And one needs to do all transaction in foreign currency, which is given, already in all ship leasing activity. Now, coming to specific additional tax incentives which are given only to ship and aircraft leasing is any royalty or interest income earned by a non-resident in case of a ship which is paid from a IFSC unit. So IFSC unit leasing a ship from a non-resident, there'll be no withholding tax which will be there on a royalty or interest income to the non-resident, right? So this allows them to obtain on lease many vessels. Second is tax exemption on capital gain arising to non-resident or a unit of IFSC engaged in the business of ship leasing on transfer of equity share of SPV, which is engaged into ship leasing. So if there is a IFSC, if there is a ship leasing SPV, which is owned by a non-resident or a IFSC entity, then there is no capital gain on that. Even dividend income of ship leasing unit in IFSC from SPVs is exempt. And income from transfer of ship which was leased by a ship leasing unit within that 20-year tax holiday period, again that is exempt. So it is not only the business income, there's a lot of tax incentive which is around capital gain, dividend, transfer of ship, which is provided to ship leasing. All these benefits are also provided to aircraft leasing. uh, yeah, I'm like cost for somebody setting up, it's not very significant. It can be set up at $1,000 with an application fee and a registration fee of 12,500. Um, yeah, I think aircraft leasing is also there's a lot of interest, because the Indian aviation sector is growing at a very, very rapid phase, and which means that okay, a lot of aircraft will be required in future. So in even the existing Indian aviation companies or somebody who's looking to acquire its own aircrafts, and then lease it back to the operating entities in India. Again, aircraft leasing is quite attractive regime. All the benefits are very similar. In fact, uh, there is also relaxation in terms of office space and manpower. So IFSC aircraft lessor is permitted to share office space and manpower with another aircraft lessor being a group company. So let's say in group there are multiple lessor entities, because typically depending upon the country where these aircrafts are, or depending upon number of aircrafts or type of aircrafts, there could be multiple entities in a group. So for a group, if they have multiple entities, they can take benefit of clubbing of their office space and manpower space requirement. I think we already spoke about permissible activity and capital requirement and the tax benefit. Uh, Now coming to insurance sector, insurance has always been a sector which was quite restrictive. If we talk about the India's own domestic insurance, but there are quite a few interesting innovative products which are available globally but not accessible to Indians, even for their. So what is happening is IFSCA provides a landscape for foreign insurance companies to set up a shop in Gift IFSC and offer their products. It also allows Indian insurance companies to also explore setting a presence in Gift IFSC, of course, subject to IRDA approval, etc. But there are a lot of products that they can offer. So they can get into life insurance, general insurance, health insurance, reinsurance. Reinsurance is a big global market for insurance companies. So typically, IRDA registered insurer or a foreign insurer or a reinsurer or a society of Lloyd on behalf of member of Lloyd, or IRDA registered branch of foreign insurance, public company, insurance cooperative society, a body corporate under foreign law, or a managing general agent with a binding agreement, etc., can act as a insurance service provider and set up presence in Gift IFSC. There are certain requirements around net owned funds, assigned capital, etc., paid up capital, right? Now, permitted transactions. So, transaction of a direct insurance business is permitted within IFSC. So, they can do within IFSC, they can go to other SEZs, they can transact with somebody who is outside India, or even somebody in DTA in accordance with Insurance Act, with prior permission with IRDA. Here, I think as regards residents, the opportunity is also for somebody investing or transferring to the extent of LRS limit, and that limit can be used to acquire. Let's say you want to acquire a global health insurance product, right? A resident Indian can also go and acquire, subscribe to a health insurance within the LRS limits. For reinsurance business, it is permissible again within IFSC, outside India, or from insurers operating in DTA, subject to IRDA conditions. Now, what are the key eligibility conditions for Indian insurance to set up presence in IFSC? So they need to be registered with IRDAI, they need to obtain an NOC from IRDAI, and they have to have a satisfactory track record. For a foreign insurer who wants to set up presence in IFSC, they have to be registered or licensed for doing insurance or reinsurance in their home country. They have to obtain NOC from their home country regulator. They have to have a track record. Then applicant has to be from a country with whom India has a tax treaty, and applicant to have a minimum credit rating of good financial security for at least last 3 years. So all these criteria, of course, insurance is more regulated, so there are more conditions. It can be set up in form of branch or company for IFSC for insurer or reinsurance. What is the minimum capital requirement for insurer is life insurance 100 crore, GI general insurance is again 100 crore, and for reinsurance it is 200 crore. Also, branch office for reinsurer to maintain a minimum assigned capital of USD 1.5 million in any freely convertible currency. For solvency margin for branch office and in corporate entities, they have to maintain a solvency margin in home country as per home country regulation and as per whatever is prescribed by IFSC. For net owned funds, they need to have a net owned reinsurance business. They need to have a net owned funds of 1,000 crore. Uh, uh, yeah, and I think one more important is a person resident in India may take or continue to hold a health insurance uh, through LRS, which I think I already mentioned. Yeah, I think for application, again, the fee is not very significant. There's an annual fee which is fixed, but also has a upside, for IFSC, which is like 1/20th of 1% of total gross premium returned by IIO, whichever is higher. So 11,500 or the one from computed from the formula, whichever is higher is the annual fee. Apart from insurance companies, there are like a lot of insurance intermediaries which in set up presence in GIFT IFSC. So there could be like either distributor or service provider. Distributor is somebody who is soliciting and selling the insurance products, and then there are claim service providers. Somebody who is doing a survey, who is doing a third party administration, etc. So they can also set a presence in GIFT IFSC. The presence can be in form of company, firm, or a cooperative society. I'm like Indian company can set up, or a body corporate outside India can set up. The minimum capital and net worth requirement for a direct insurance broker is USD 100,000 and net worth of 80,000. For a reinsurance broker, it is 550,000 is the capital requirement, and composite broker it is 675. So all like there are like requirements around capital. They need to have net worth, and in case of branch, again there is a capital requirement. You need to have adequate infrastructure, qualified personnel, etc. Also, they need to comply with KYC and AML guidelines. Uh, yeah. The fee again for each type of registration, there is a different application fee, registration fee, and annual fee. So there's a lot of opportunity which is even available to those entities, which are like corporate agents or uh, uh, reinsurance broker or composite broker who offer. So composite broker is the one who offers direct or reinsurance both products. Yeah, so I think there's a lot of opportunity for somebody to do even insurance intermediary services. GIC, I think already both the speakers spoke a lot about that, so I'll not get into much. Not even TA services, right? Because I think already a lot of it is covered. Uh, as regards BATF, I think in BATF, what is important is the conditions which are there, right? You cannot transfer your existing contract or work arrangement. But I see, there's a lot of opportunity for somebody who is into a field of chartered accountancy to set up a whole new BATF services, because the benefit of BATF is it doesn't have to be BFSI restricted. Your customer can be in any other form also. So that allows or expands the scope of BATF services. So from GIFT IFSC, you can go and help on all these four fields for anybody across the globe, and it need not be a pure BFSI. So that's the key benefit of BATF. Again, there are some experience requirement in principal officer and compliance officer, but I think it should not be a challenge. Uh, yeah. Now talking about how does one set up presence in IFSC? So again, there's like a process. One needs to obtain a name approval, obtain a principal provisional letter of allotment. Then you set up a company, right? Then there's a SWIT portal through that you file an application. Yeah, and multiple, there's a process involved, but we have seen that IFSCA regulators and authorities, they have been quite forthcoming when it comes to giving access to, multiple, uh, uh, I'm like understanding the requirements, and this, if you look at the new GIC regulations, etc., there's a lot of flexibility which is created that if you have a unique case, you can go and present to the authorities, and they can help you in customizing and see that whether they can meet a specific business request that can be that is considered to be more a pragmatic approach. That's it, I think. From my side, I could finish earlier because a lot of it was covered by earlier speakers. Yeah.
Um,
So maybe,
Hello.
and like if anybody has any questions,
Yeah,
we
if
can
anyone has
directly.
queries, we will take up the questions now and help everyone go ahead. If anyone has any queries related to anything, I'm sure Himanshu Bhai and Harish Bhai can answer all of them. If none of them have questions, we will wrap up here. Yeah, it sounds good. Then no one has questions, and we are seeing people leaving. So thank you so much for coming and taking this seminar and guiding us through to the much budget topic, which was on budget IFS, gift IFSC. So if anyone has any queries, I am sure they will be personally also reaching out to you all. So thank you very, very much. Hope everyone has a good evening. Thank you. Bye-bye.
Thank you.
Thank you all.